Okay, hi there traders and welcome to Trade the Structure. Now I'm just going to go over three different sessions that I've been trading. So I trade the Hang Seng index a lot and we talk a lot about it on our website and discuss it in our forums on Discord. But yeah, I trade a lot of intraday stuff. I enjoy that. I find that very challenging, and especially the current climate. The current climate's fairly challenging at the moment, especially intraday. You've got some lower volumes coming out of Christmas. They'll pick up as we come into the new year, start of January, end of January, when everyone's back after holidays. But it's been rather challenging lately. But what I want to describe to you now is the three different sessions and the reasoning behind the trades and the way I would structure my trades with regards to price action. First and foremost is price action. Now you'll see I've got a few different indicators on there. This is just this is actually a 5-minute chart. So this is the main chart with the three different areas that I was trading. But we'll look at the 1-minute chart and I'll walk you through. So I've got these three different charts across the top. We'll walk through each individual sessions and the trades that actually took place. Okay, so what I'm essentially looking to do, I'm essentially looking to take care of or take advantage of momentum, okay, and get a good read of momentum. Now, what I've found in the past and what I've been doing lately is slightly different, but what I would do is look at a 5-minute chart and a 1-minute chart. So I'll set my levels prior to the session. I'll set all my levels up, and here's one particular level that I've marked up coming into this session, and it remain there for this session, and later on for this session, it's actually worked its way off there now. But that was a key level for me, what I was looking at from a 30-minute chart, for example. So I'll filter down, look at different charts. The main one is sort of the 30-minute, because intraday, you don't really want too much more than that. The 30-minute with the key levels and just get your bearings on the market, come into that. And then what I look to do is break it down and make sure that on the 5-minute, if there's any sort of minor levels I've got to watch out for, where would we be going? I call it bid to offer or offer to bid, whether the market's going to start testing into a big zone and then bounce off that. It's going to flush out or trap some sellers, flush out some buyers, and then bounce, okay? And then drag its way up when we go from bid to offer, look for an offer zone. So I'll have all that marked up prior to the session, okay? But what I'm looking to do essentially is get a read on that momentum. And like I said, I used to have a 5-minute chart and a 1-minute chart. Now I'm just essentially, I've got the 5-minute on the side, but I'm essentially just keeping an eye on the 1-minute because I've got my two MACDs that I use now, a faster one and a slower one. So I'm trying to replicate with the slower one, the 5-minute or the later timeframes, and the fast one's the 1-minute, okay? And I also use the exponential moving averages, okay? Three of those, I think I've got a 10, a 20, and a 50, all right? So that's how I'm trying to get my bearings, but if I took all that off, I could still trade. It's a bit harder to get bearings on momentum and what's in play, but looking at price action purely and what's happening with price and who's washing out who's minor levels, taking out the low, bouncing, and all that sort of stuff. You can do that with a clean chart anyway. But I just find that what I'm going to describe to you, the key aspects of my momentum and what I'm looking for, I find it very helpful with MACDs, okay, and using the EMA. So if you've been following me for a while, you've probably seen that all over the charts. So we're getting to describing these three areas now, and each day, this first session wasn't too crash hot. I actually was losing, and then I pulled it out of the bag at the end and got a nice little buy. So I was shorting into the market, kept getting chopped out. And in the back of your head, you got to remember, don't get too adamant on, okay, I think I'm right. I've got to be right. It's short. The market's wrong. No, the market, if it's going to chop you out, there's a reason for that. And you've got to keep in the back of your mind, what if you're wrong and it's going to go up? Then you've got to be looking for that buy, but you've got to look for the price action. What I always look to tell people is you've got to see the trade, okay? By see the trade, I mean it's got to be clear as mud, all right? It's got to be clear as day. Probably clear as mud's not the best, but clear as day when the setup's there, not trying to force the action because you think something's going to happen, okay? And that's essentially what I was probably doing at this first session here. And yeah, like I said, a few shorts kept getting stopped out, minor losses, but they add up after a while, and then making it back on the long side. It was a break-even day. It wasn't a winning day. I won't lie to you. I could say that, as you've seen, there's a good long after that. I basically cut it after it spiked 100 points, just before it spiked 100 points. Sorry, so bit of bad luck there in that trade, but we'll look at that. And then these 2 days was just trying to remember the same aspects. Look and see the trade before you trade. Don't try to force a trade. And then the same with this third session. And they both worked out well. Yeah, a couple of losses, but kept it to a minimum and then took advantage once I saw that price action really play out nicely. And it's something that, it's a setup that I like, setups I like to see, and it was there, it was clear, and I just have to take it and hold, and really have confidence in that structure is going to play out. Okay, so we'll start with that now. I'll just get over to this one. This is that first session I said was a break-even session. You can see I was shorting quite a bit. I didn't short in here. Okay, there was no real setup. I was watching that for a short, but it didn't play out. Okay, I'm looking for a particular setup. I'm looking for something like a shoulder. We call it a shoulder or a lower high. Then I can short into it. Like I did short into this one. That was profitable, but I thought it was going to go through the low. So as soon as it started to bounce, we started to chop in here, I was out. Okay, and then it reconfirmed, I shorted again, and then basically it went nowhere, and I got stopped out on this retracement here. Okay, and then you can see the price action was starting to hold. So you can see each time it's just flushing through those lows, this big move up here. So when it pushes down and it drives all the way back up, nearly drives back up to where it started, and then drives back down, that's not a confident market on the sell side. Okay, it's like it's getting soaked up for whatever reason. It's a bit choppy. It's not the kind of price action you want to be involved in. Okay, you want to take, you want to trade in. All right. Unfortunately, I did, and I paid for it on about, I think, 3 trades. It wasn't until this last one, just in here, where it really played out nicely. Okay, so we'll talk about that in a minute. But what I'm essentially trying to do with the MACD is get the short term, anything sort of above the zero line for buyers and below the zero line for sellers. Okay, try to keep it pretty simple. And the same with the 5 minute. So essentially that's the overall, it's the overbearing momentum of the market. And you can see that it was down most of the time coming to that session. This was the start of the session. So it started, it was choppy, but it was slowly going down. And it was about this stage here, right through here, you can see the momentum on the 5 minute was negative. Okay, yet that's the reason why I was selling. So those 2 trades, that was a winner, that was a loss and a loss. They were, this one here was probably, in hindsight, was a stupid trade, and I probably shouldn't have done that, but it was getting a bit more aggressive than what I should have been. And the reason why I shouldn't have got involved in that one, you could see these 2 moves down, and after the second move, I was shorting into it. Now, when you got a move down and then a bounce, a couple of green candles, a move down, it's showing a lack of strength in selling. Okay, and then I'm trying to get on the selling side, which doesn't make a lot of sense. So that was a bit dumb. Whereas before, you got a nice shoulder, good selling strength here, nice shoulder to come into, took advantage, went short, it just didn't go anywhere. So it just didn't work out for me that time. Okay, but essentially I was with the MACD, I'm on the right side. It was on the sell side for me. Okay, momentum's down on the short term. It was choppy. Admittedly, that there, all this action through on the MACD on the 1 minute was really choppy. The 5 was down. Okay, so I should be biased down. It was just not playing out for me. But what you can see is when it's constantly getting soaked up, like we've got this low here. All right, if we just draw that up, that layer was broken, bounced straight back all the way back up here. Then we broke that low, okay? Then it bounced right back up here. But then we started to make a higher low. So you've got to take notice of that. When we start to make a higher low, and we're not going to go down, it kept getting soaked up. So there's some buyers there that are willing to let it trap some sellers, squeeze them out, trap some sellers. So they're building up inventory, okay? They're building up a base. They're building up a position, okay? It's not like your mum and dads that are trading 1 or 2 lots potentially. They're trading a lot more, and they might be scaling out a bit, adding to their core position, scaling out a bit, adding to their core position, and so on until it starts to go in their favor, until the market starts to turn. And that's where you can see the MAs were starting to flatten out here. We've got a high low building through here, high low here. Now you go and look at the MACD, the high low, it started to, you can see the momentum on the 5 minute was starting to come up, and it was turning about this spot here. Okay, and the MACD on the 1 minute was positive. So for me, I jumped in there, and I think, I jumped in there. It was right on that break. It was actually just through this high, if I can show you that. It's more through that high there, around that high. I gave it a bit more room, so it already had, I was already down slightly for the session, but all in all, that did work out quite nicely, held it, and this is about where it got out, and you can see it was into this high, and by then I'd sat through this chop. I actually thought it was going to go then. I was nearly going to scale some out. I think I did scale some out here on this pullback, then held a bit more, and I cut it there. And I thought if it goes through the highs, it should be great. But for whatever reason, I cut it into that high. And then you can see that basically it was from about 300 to 400, 100-point pop. So, yeah, but you can see that's the reasoning behind that day. If we go to the next session here, now that's up here, okay, from that 5 minute chart. We go back down. This is a 1 minute chart. The previous chart we just looked at was a 1 minute also. I'm trading off the 1 minute, but like I said, trying to keep the bias from the 5 and the levels from the 30. Now, this is that level that we're saying. So the market, when it opened, I think it was actually here, it pressed down, tracked in some shorts, I didn't take advantage of that. I didn't take advantage. I didn't trade that there at all. I was just watching it, and then it blasted up. I thought we are going to go for a bit of a run into this high originally, and I don't mind when it starts to press down. When it starts to press down, it's just trying to trap some sellers, but it's got no conviction on the downside, and it keeps popping. Too many pops indicates to me that there's someone there, whether it's an algorithmic trader or insto, they're letting people drop the price and they're buying it straight back up just to try to, bring in some shorts, trap them, squeeze them back out so they can buy into it, and then trap them and buy into it. Okay, and that's what it seemed to be happening through here. So I didn't bother with the short side because I was actually looking at that. More often than not, they'll try to, at least they're so close to a level there, you would expect they're going to at least test it if they're going to have a big sell-off. They're going to at least flush it, okay, and trap some longs on that side before they squeeze them out on the downside. So I was looking for that level to be tested. Okay, you can see it just went straight up. Now, I didn't get an opportunity to go long. This here is not really a setup for me. You can see that the bias on the 5 was just starting, the MACD was starting to turn up. So I would rather see this kind of scenario when it's near the 0 line or a few more red sort of bars on the histogram. Should I just show you a bit there, a bit better? A few more red bars on the histogram before you get this. And this is not, as a candle perspective, is not a good setup for me. Okay. And that eventually did take off. I could have traded this 3 candle setup is something that I do like, but after this kind of move down in that pop, I didn't want to get trapped. Okay. And I was a bit wary of that. So I missed anything on the long side there, but then we got this contraction back into the level. I thought, okay, if you're going to break a level, you're going to do one or two things. You're going to retest and hold, and it's going to rally. Or you're going to come straight back down. You're going to do something like this. You're going to come straight back down to the zone, retest it, and you're going to sell off. Okay, so the move above is a trap of longs. Get them, squeeze them back out again. But when it holds and it starts to build like that, you've got to be wary that, okay, this is going to hold. We're probably going to go higher because anyone that's been shorting into here is fodder to get squeezed out for a rally. And that's what I was wary at. Now, I got in here, and I think I added here, and I got out later on down the track, but that was a battle. It didn't kick on like I thought, but still, 2 trades, and they were both positive, which makes up for the previous session that was pretty much a break-even session. Okay, so that worked out really nicely, but you got the same sort of scenario. We've got the MACD on the ones pulling back. It goes into that negative territory where you should be selling from just the 1 minute chart, but the 5 minutes up. So you sort of want to keep out of that. When we start to roll up again, and we start to get this move, when the MACD's starting to go positive again, then I'm happy to get in because I know the 5 minute, the window in my sales with the 5, the longer term is bullish. Okay, the bias is up. I'm in a positive area. Okay, so that for me is really nice setup. Played out quite nicely, and I think I got out somewhere into here just before that high. Then it started to fade anyway. I think later on it took off, but by then I was done and dusted. Okay, we'll look at the third trade now. And the third trade is, no, it's not the third trade. Sorry, get it back there. Okay, that's the third session. I'm going back to here. That's the third day there, okay? So that's the third session when here we've got the ninth session to come back up. And again, we're playing around that resistance level. Okay, so what you'll see in this session, this was yesterday. All right, so here, the same sort of scenario as before. You pop up above, we start just below, we start above, flush below that same level that I'm interested in. And I thought 2 things again. It's either going to break above it, grind above, and this didn't give me conviction the way it was grinding above that level, but found some sellers just in here. It didn't give me conviction to be long. So I was nibbling on some shorts here. I had a short in here. It popped. I got stopped out. Well, I stopped myself out. Then I had another short in here, held it through here. And when it started to rally, I stopped myself out again for a small loss. So that's 2 losses in a row. But what that also gives me is a bit of conviction that, okay, there's a bit of chop through here. It was coming down. But as soon as we start to hold in here, and you can see that it's a level from previously, I'm pretty happy to look at that and say, well, that's sort of in the same resistance zone that we've been looking at on the longer term time frame, the 5 minute chart and the 30 minute. This through here, this whole level through here, it's retesting back into the zone and we're starting to lift. So what are my MACDs telling me? Okay, we've got a sell area in here, which it worked out for me. I'm probably, looking at this on the longer term 5 minute for the MACD, I probably shouldn't have been shorting that. Probably, again, getting a bit ego, getting involved in the wrong price action as opposed to getting involved in the right price action like the previous session. Previous day was really good. 2 trades, 2 wins in the right price action. This, a little bit eager, but once it started to play out, and like I said, the trade becomes clear. When you've got a higher low, you've got this move up here, roll over. If this was going to be weak, it should have gone a lot lower, below this zone, this resistance zone, but instead it retested it and it started to lift. You've got a higher low off that level. So for me, that is a beautiful long trade, or it's a beautiful setup for what I'm looking for. Okay, and I bought it here, bought it again, and I think I scaled out just up here. Okay, just up into this high. So it was somewhere from here. I think I got there, and that second trade I took it a little bit longer, but essentially not that much. And you could have held it a bit longer, and essentially it did pull back, and then later on it rallied a lot harder. But that was me. Like I said, that was me done for the day. And if you look at these MACDs, we're into once we start to get in this higher low hold here, prime setup for me. We're in the positive zone. MACD on the longer term starting to go green again. It is in the positive area, but it's starting to play out really nicely. So if you start to go and look through, just using your 2 MACDs maybe. If you're an intraday trader, you can even look at it in the longer term time frames. It helps me a lot. Okay, and I really like it. I could trade off no EMAs, no MACDs or anything, just pure price action. But I find that it's a bit harder. Okay, I prefer to look at something that's going to give me a bit of a heads up for momentum. And I think what I'm finding is keeping me more and more out of the wrong price action, as you can see from the last 3 sessions that we've just traded. So yeah, that's it. That's what I'll be doing down the track is adding a short course in the way I trade. Okay, it'll be a free short course. It'll be more video based and just describing from start to finish how I'm looking at the markets, what I'm looking for when I'm trading, some basic setups that I like to see, and that'll be putting out on the website at tradethestructure.com. So feel free to jump on. Everything's for free. There's a few terms and conditions, but you can read that once you jump onto the site. And then, yeah, feel free to go through the members area once you're logged on, and you'll see the different material, but I'll be adding that to the members area anyway, that short course. So if you'd like to do that, just let me know. If you've got any questions, feel free to email me all the details on the website, and then we'll just go from there. All right, guys, hope you enjoyed that. If you did, leave us a like, and this will be on my YouTube channel also for further reference, and I'll put it up onto social media down the track. So thanks for joining me, guys. We'll speak to you soon.